What a good week again in the stock market. If you want to know what happened the whole week, and we have very, very important data that we need to share and very important market development that we need to share, so stay tuned until the end of this video. Welcome back to Smart Investing. Let's go straight into it. So let's start with the usual QQQ. So you know the routine now, we start with the usual QQQ. So you can see that this week has been a fantastic week. I mean, we started with a huge gap up, and then we actually broke clearly above the 200 moving average, and we actually terminate the week on a high note because we are actually at the highest point of the week. In 1 week, if you look at the weekly candle, 1 week, we have done actually about 5% or 4% on the QQQ. And you can see since the bottom of the market, when we call actually the bottom on this channel, you can see that we had a straight 1 week, 2 weeks, 3 weeks, 1, 2, 3, 4, 5, 6 weeks of positive uptick in the market. So basically, this is an incredible comeback, you know. We have about 29% comeback from the low of the market, which exactly is the high point of the VIX that we discussed in this channel, you know. So I hope you feel good. So what is going to be interesting this week is that and the following weeks is are we going to see if we're going to go to all-time high, which is almost like certain we're going to go to all-time high, but are we going to break out or are we going to retrace back and to have another new lows like a lot of market participants, a lot of market competitors are talking about? To my opinion, we are going to reach an all-time high and we are probably going to retest some of the support level, maybe trading a bit of sideways until the next earnings season, where we're going to see exactly what will be the first sign of the tariff impact on the economy and onto the earnings of the companies. But having said that, we need to enjoy this fantastic market recovery, and this is something good that we need to take. S&P 500, same story. 5 weeks, 6 weeks of very strong upside, and we are reaching almost all-time highs. Same story as QQQ, so we're not going to go further than the same story. What is also important, the market go up, but also the VIX go down. And when the VIX go down, oh my God. So now we look at the VIX straight down, you know, look at that. 1 week, 2 weeks, 3 weeks, 4 weeks, 5 weeks, 6 weeks consecutive down of the VIX. Now we are back to the normal level of the VIX. We are now at about 17. And next week we're going to go probably back to 16. And 16, as you can see, is a normal level for the VIX, you know. It's not so elevated. It's actually a pretty normal level for VIX, below the 200 moving average, and we can see that the VIX is a good indication that the market has come back to normal again. What is also extraordinary is that although we see the market almost reaching all-time high again, it does so without the help of the rate, which is quite very surprising, because you would think if rate can keep creeping up, the market will pull back because it's a discounted factor. But actually, no. The market doesn't seem to care that rates are increasing again and again and again. And now we are almost back to the highest rate that we see on the 20 years and on the 10 years. Because if you look at the rates, let me see the rate. If you look at the 20 years rate, we are close to 4.92%. On the 10 years, 4.441%. We're almost going back to the all-time high, you know. I'm not going to be surprised if we go back to the 4.8%. But somehow, you see, almost to go to all-time high for the 20 rate, and the 30 rate almost go back to all-time high, but somehow the market doesn't care at all. The rate is going up and up and up. And that's where we're going to come back when we're going to expect it the least. Maybe that's going to be the reason for the pullback when we reach all-time high for the S&P 500 or the QQQ. Okay, other than that, Max 7, we have also 6 consecutive weeks of positive upside for the Max 7, but we can see that we are actually reaching a level of 52 or 53 more or less, and that's a level of resistance that we had for the Max 7, and we are going to certainly also go back to all-time high. But again, we go back to all-time high back in December last year. But what has changed from December last year again? If we actually collapse from the December last year, we had all this talk about this is too expensive, too rich of valuation. We are at the highest point of valuation in history, and all the stories that you remember go back on YouTube and just listen to the economic pundit, investment pundit, or CNBC, MSNBC, and so on. You will see they were talking about this is too much value, too much this, too high PE. All the good news has been baked in. This is a bubble for AI, and so on and so on. Are we going to hear that story again when we reach all-time high? Let's see. That it might be that the case that the story of too much valuation, high PE, and we need to be careful about the coming inflation because of tariff, the increased rates, and so on and so on. So I think all this story and all this talk will come back in the market. Now it's all positive. Everybody seems to don't care about anything about the rate, inflation, or tariff, or whatsoever, because all the data that we've seen this week is brushing that on the side for the moment. So other than that, it's a very, very good week. We can go through a lot of different examples, but nothing really extraordinary. All the market come up. One stock that maybe we can talk about is United Health. I will do a dedicated video about this company, but this company actually collapsed from all-time high to the low of 58%. Collapsed 58% in a matter of a few weeks. Recover 16%, but can you believe that 58% this stocks collapse, you know? 291, now it's 52%. So whether it's a good buy or not, I don't know, but I'm going to do a deep dive into United Health, and I will do a video. So stay tuned in this channel for this video on United Health. Might be a good opportunity, might be a value trap. I don't know, but this is something that I want to share with you in the coming days. Other than that, you see that SOX also is going back to 225. AMD is reaching the 117, reach actually the 122. So I think all the stocks are doing really well. What I did, because I'm a bit scared that the market will pull back unexpectedly, and I don't want to be trapped again, so I covered a lot of my key position with selling calls until the end of the year. So at least I make about 15%. Even if all my positions are called back, I made already my 15% until the end of the year. So I locked in all my profit. And if the market pull back, let's say pull back by 10%, then I will have a lot of my position covered, and I will cash all the calls and get out of the position when the market do its second leg up. So my fear is that the market will reach all-time high for sure. We'll go there to 541 for the QQQ, but we'll pull back at least to test again the 485. That's my take. And then for the 485, we'll test again this 55 moving average, and then we'll do its second leg up. But all will depend on the headlines about the tariff, about inflation, about a lot of things that is happening in the market, but also about valuation talk, about the next earnings. But I don't think that we're going to see a massive breakout from all-time high and then just carry on the rally from there. It will be very, very, very surprising that it does that. It could be, but it would be very, very surprising. This is a huge fall that we had, you know, huge fall, you know. That's incredible that we actually plunged close to 26% from all-time high. On QQQ, we're already back to break even after just 1 month. 1 month from the low, back already to all-time high. You see the type of crash that we are having nowadays in the market? Rapid crash and rapid V-shaped recovery. All the people are saying, oh, you know, it's going to take a long time before to recover, and this and this and this and this. You see, if 1 month already, bang, we back to all-time high, break even. So I'm actually covered my position. I'm already happy to make my 15% by the end of the year. And if the market does 20%, then I will only miss 5%. But at least I'm covered in case the market pull back, you know. And I don't want the market pull back and I get trapped again to new lows or to another halfway down or 50% retracement from the highs today. Because it could happen that we go touch again a double top and then we retrace back 50% and then we just break out after. But then I want to cover myself. I want to cover myself with calls so that if we actually pull back again or retrace back 50%, I can cash all my calls, make some money, some income, and then leave my portfolio on edge to retake the upside. And then if it doesn't happen, then let's leave it. You know, you can break out. I will leave all my position covered until the end of the year. I will make my overall 15% on my portfolio. That's the income I generated by selling all my calls on my entire portfolio. I got few positions not covered because I'm still waiting them to be back to break even, like the IWM, for example. Or I got also some position on uncovered, like on the Novo Nordisk, Nike, IWM. That's my 3 of the big position I have that is not covered because I don't want to sell call when the price is not being back to at least break even. So I cannot sell call with valuable income and return. So I wait for this price to come back before to sell call on a covered basis and make maybe 15-20% on those positions, you know. So that's my strategy. So if the market do more than 15%, then I'm losing compared to just leaving all my position on edge. And if the market do less than 15%, I'm winning because I do more than the market. And if the market crash again, as some pundits are trying to explain, then I will make my 15% income. I will cash all my calls on the way down, and then I will leave my portfolio on edge to recover, you know. That's an external strategy because it's a win-win strategy. I would be very surprised that we do close the year by more than 15% on a year-to-date basis for the QQQ or the S&P 500. But again, we can be surprised, you know, this market is crazy. Sometimes I have the feeling there is no more rationality in the market, you know. One day is like this, the other day is like that. This is very strange. Anyway, let's go now to economic calendar. We started the year, we started the week with Tuesday. We had core inflation very good, less than expected or in line. That was excellent, you know. Less than 2.3% only inflation rate over year is almost close to the 2%. So I don't understand why Jean Paul is waiting for decreasing rates. On Wednesday we had nothing important. On Thursday we had very important PPI. PPI negative for month over month and year over year 3.1%. I mean, can you believe PPI negative? It's like a leading indicator for CPI in the coming months. So if that's true, then we're going to have a low CPI again. I mean, PPI month over month or minus 0.5%, year over year 2.4%. Retail sales slightly lower than what was expecting and the previous numbers. But overall, all good on the inflation front, you know. Friday, what did we have today? No important data, you know. No important data. So the week has been pretty good on the economic front. They're just telling you there is no inflation yet showing up in the numbers. All the talks about inflation because of tariff and so on has not materialized yet. We have not seen any deterioration of the employment market. Unemployment is not creeping up. The employment market is still very strong. The economy is still very strong. I mean, I've listened to the Jerome Powell speech this week. He was repeating the same things. So I don't understand what he's waiting for and what he's actually waiting for to decrease rates. Is he seeing something that we are not seeing? Is the bond market seeing something that we are not seeing yet in the numbers or the hard numbers? Because the bond market is telling us inflation is going to be back. Otherwise, rate would not go to the all-time high of 5%. And the bond market is telling us the Fed is not going to decrease rate. So the long-dated rates are showing us there will be inflation in the coming quarters, in the coming months, showing up in the data. And they are saying because of that, the Fed cannot reduce rate. That's what the bond market is telling us, and that's actually what the Fed is implying. Other than that, then we see a lot of, over the whole weeks, we have seen very good headlines about the tariff negotiation, about the market reaching almost all-time high, being positive again for the year to date, positive for both the S&P 500 and the Nasdaq. And that's great, you know, that's great. All is great. But now we're going to reach again all-time high. What will be the next move? Will the next move be another leg down? Let's, for example, 50% retracement, or will this be a full breakout from all-time high? Then we go to the moon, like a lot of people are saying now in the market, and we're going to FOMO again, and everybody's going to panic rush, panic buy, and then the market will do another leg up, and then we're going to talk again about, you know, this is a bubble, AI bubble, and this is too much valuation, this is too expensive, we need to be careful, the market's going to crash, and then we're going to get an epic crash, there will be a recession. There's still a lot of recession talk, don't get me wrong. When you when you listen to Goldman Sachs, JP Morgan, all these big banks speech on MSNBC and on CNBC, they all talk about increased probability of recession of 50% and more. So this is not out of the table, but so far so good, very good. So What do you think, guys? Do you think the market will reach all-time high? Then we're going to go, clearly, we're going to break out by the end of the year? Or do you think we're going to reach all-time high, then we're going to retest, retrace back 50%, or we're going to retest some level, lower levels, then we're going to trade sideways until the end of the year? Or do you think we're going to crash and reach new lows from the April lows, like I hear a lot now on MSNBC and on some YouTube channel and some podcast? Leave me your comment below. Please subscribe, like, and leave a comment. Thanks so much. See you next week.